Today, Bitcoin hovers around $99,000. Trading platform eToro reportedly files to go public in the US. And Jardine of Chainalysis shares new data that tracks how illicit crypto activity is getting even more sophisticated. Welcome to CNBC's Crypto World. I'm Ryan Baker. Bitcoin and Ether are both holding steady this morning after getting a boost from positive economic data in recent days. By noon Eastern, Bitcoin hovered at the $99,000 level, and Ether was pretty much flat at $33.38. XRP is surging this morning, though, to $3.38 after the SEC filed an appeal in its case against Ripple. But more on that in just a bit. Okay, let's talk about the top stories. Trading platform eToro is reportedly gearing up for a debut on US markets. According to the Financial Times, eToro confidentially filed paperwork with regulators to take the company public. The IPO could value the business at more than $5 billion. The reported filing comes after CNBC reported last February that the platform was interested in an IPO after an abandoned SPAC deal. This comes after the firm reached a settlement with the SEC in September that restricts eToro's cryptocurrency offerings for US customers to only Bitcoin, Bitcoin Cash, and Ether. Next, the SEC is appealing a ruling in its case against Ripple just days before a change in leadership. In a Wednesday filing, the agency asked a federal appeals court to overturn a 2023 ruling that found XRP was not a security when sold to retail investors. The SEC wants that decision by the New York District Court overturned and those retail sales to be deemed unregistered securities. The firm's chief legal officer, Stuart Alderati, posted on X that the appeal is, quote, a rehash of already failed arguments and likely to be abandoned by the next administration. Last, Trump Treasury pick Scott Bessent testified before the Senate Judiciary Committee. In his testimony before lawmakers, Bessent said he would help the Trump administration unleash the American economy by implementing pro-growth regulatory policies, reducing taxes, and unleashing American energy production. Of course, regulation is a major focus for the industry, which is hoping a slew of pro-crypto legislation will make its way to the president's desk once Trump takes office. All right, let's talk about crypto crime for our main story today. Chainalysis out with new data showing the types of crimes that involve crypto, and the bad actors using digital currencies are growing more sophisticated too. Crypto World's Jordan Smith spoke with Jardine, cybercrimes research lead at Chainalysis, to have him break down the numbers.
All right, Eric, thank you so much for being here. Let's start with the overall picture of illicit crypto activity last year. The data that you released found roughly $41 billion in value received by illicit crypto addresses. That looks like a decline from the $46 billion in 2023, but tell me why your report found that that number that we see right now may not be the case and it may change.
Sure. So it does on paper look like a decline. I think you have to think about it in terms of snapshots in time. And so we measured 40 point some billion for 2024. But if we think about how our attributions on chain are going to improve over the course of, say, the next year, our expectation is it might be around 25% higher than that when all is said and done. And so we're looking closer to probably about 51 billion, and that's actually a record-setting year.
One of the important notes that you make in this report is that the things that make up that $40 billion plus in illicit activity is growing more diverse. Talk about the changes in the types of illicit activity and which might be the fastest growing based on your analysis.
Sure. So if you take a long and zoomed out historical lens, crypto used to be very heavily weighted in the early years, at least when it came to illicit activity, to say darknet markets. It moved from that into a heavily concentrated scam ecosystem. Since then, we've started to see a diversification across a wide array of illicit activities. And one of the ones that we're tracking in 2024, and I'm sure it'll continue through 2025, is a professionalization of this ecosystem. And so now we are seeing professional launderers, services that are providing infrastructure for scammers, for stolen fund actors, and people of that sort. So we're definitely tracking that, and we did see over 10 billion going to these sort of support infrastructure actors in the course of 2024.
What's the reasoning behind that professionalization that you're talking about? Because, there's always been the argument that, crypto is rife with criminals, whether or not that's true. But what exactly is making it appealing to these more professional actors that you're seeing in these trends?
I think what we're seeing is a maturity of the illicit actors in the space. So they're basically doing what happens in most economies, in this case, an illicit economy, where as they grow in scope and scale, what they'll tend to do is specialization will emerge as an efficiency enhancer. Illicit economies in many cases operate just the same way as legitimate economies. I wanted to pick up on the point you made about whether or not crypto is mostly per se illicit, because we do, as you know, I'm sure, publish a share measure, which basically captures that exact point about how much of the ecosystem in a given year is illicit versus legitimate. And there we actually saw our share measure drop to 0.14% of the total. And so I think that sort of suggests that we're not dealing with, even though we have probably 50 billion worth of activity, we're not dealing with all of crypto being in any way, shape, or form illicit activity.
Yeah, I saw that number in the report, and I thought it seemed relatively low, but I was going to ask you, how does that fit into the context of previous years, that 0.14% compared to, say, the height of this illicit activity that you were tracking?
Yeah, so I think the way we measure that is, illicit activity divided by all activity. And so if you have, for example, as we do track in other reports, growing global adoption of crypto assets in various shapes and forms, and more activity occurring on chain, that will drive up the denominator. That's going to make that share decline. And it basically says, to me anyways, that what's happening is illicit activity is growing on chain, but global adoption is growing faster. And so we are sort of getting to a point where the mainstreaming of crypto means that the share of illicit activity is continuing to sort of do a secular decline. And more or less, you can think about it as a 1% or less problem.
One of the other things that I think stuck out to me in this report was the trend towards stablecoins. It found that they make up the bulk of illicit transaction volume. Why are we seeing this trend towards stablecoins over other cryptocurrencies? It seems like a lot of people were focused on whether Bitcoin was a big focus in past years, but why stablecoins now?
So that trend has kind of emerged in conjunction with the growth of stablecoins in the ecosystem overall. And so I don't think we could really separate the two of those, that as stablecoins have become more central to grow the global crypto economy, so have they become more central to at least some forms of illicit activity. And we certainly see in the case of, say, darknet markets, that they don't touch stablecoins. It's Bitcoin and potentially privacy coins like Monero. And there's a good reason for that, because stablecoins can be frozen if they have a centralized issuer. And so they make a horrible tool for illicit activity. And I think eventually, if I were to make sort of a forward-looking guess, I'd say that realization will become more and more apparent, and stablecoins won't disappear from the illicit actor ecosystem, but they're going to probably diminish in scale because they're just not very good for illicit activity. Once you factor in the fact that centralized issuers can freeze tokens.
We've talked about the crime that's happening. I also want to ask about the law enforcement angle. Is there anything that you can share right now about how law enforcement is working to recover these funds or stop bad actors, and if they've improved their methods in 2024?
Sure. So we have a lot of examples of various interventions closing off, for example, no KYC exchanges, as was done with Cryptex and several others done by the German police in September of 2024. And what that does is apply friction and pressure to illicit actors, because it removes a cash out point and a laundering point. And for many of these crimes, especially those that are financially motivated, if you can't launder the funds, if you can't off-ramp the funds into some sort of fiat currency, depending on the country of the bad actor, you kind of have less of an incentive to commit the illicit act in the first place. That's kind of balanced against, I would say, the growth of the professionalization that we were talking about before, just because professional launderers are part of that professionalized ecosystem. But we do have a large number of positive events in the law enforcement space. Takedown of Lockbit in the ransomware zone would be another example. So all that's to say, law enforcement is certainly doing a lot. They should be applauded, I think, for those efforts, and they are helping to keep the crypto ecosystem relatively safe.
Final question for me. I know that Chainalysis will have more on this in the coming year, but what trends are you watching in this illicit crypto space in 2025? What should people be looking out for?
So if I was to make two predictions for the coming year, I think one would be that if crypto assets do what I think a lot of people expect them to do, and they increase in value during the course of 2025, both the amount of value stolen and the amount of value that is defrauded from people, scammed from people, I think both of those numbers are going to go up significantly in 2025. And I think another broad trend that we're observing that I think will continue is crypto will begin to or continue to touch sort of atypical forms of crime, ones that have a payment dimension, but most of the crime actually happens off chain. So wildlife trafficking or in-person drug sales or things of that nature. I think we're going to continue to see that crypto becomes the payment rail for what is otherwise an off-chain crime.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.